Hey guys, welcome back. Today's video, we need to talk about a major structural shift happening across the semiconductor sector. Because while a handful of high-profile hyperscale stocks continue to push towards their all-time highs, some of those being the memory titans, we are actually seeing some of our core long-term conviction plays experience some significant selling pressure this last week. And that pressure is causing a ton of retail anxiety, and it's causing a ton of questions on the channel as well. Those questions are all related to these two stocks. You saw them in the thumbnail. It's Intel and it's Everspin Technologies. Everspin, you may know better as MRAM. That's their ticket on the street. But I've received a ton of questions related to the performance of these stocks and what exactly is happening. Why are they pulling back? Why are we seeing selling pressure versus where we saw these stocks not only in the month of May, but maybe even a few weeks ago? Like why is the momentum stopped? So that's what we're going to focus on in today's video. I'm going to dive in and show you exactly, or give you my opinion of why I think these stocks are facing a bit of selling pressure right now. But you have to remember, I work hard in this channel to separate the short-term noise from the true signals in the market, the true long-term structural data. So I'm not just going to react to the immediate panic or anxiety that we saw this past week. Instead, I'm going to dive into the tape and I'm going to look at the specific factors that I believe are causing some selling pressure for these assets. I'm also going to talk about some of the harsh realities or the execution from the companies and how it's having an impact on their share price. And then finally, I'm going to give you my long-term outlook, how I'm playing these stocks in my individual portfolio and how I'm looking at them moving forward. But if you guys haven't done it already, make sure you hit like, make sure you hit subscribe to the channel. In all sincerity, I just want to say thank you. I appreciate each and every one of you for all the support of the channel, all the questions, all the likes, all of the engagement overall. It has been an amazing experience. Let's keep this experience going. Let's continue to grow the channel together. So if you're not part of the community today and you value this content, make sure you just take a second and hit subscribe now. All right, let's get started and talk about our first stock, which will actually be Intel, because I think when you look at the tape this week, it is a perfect example or a perfect illustration of signal versus noise. Let me pull that up. We can take a look at actually how Intel performed across the month. But I have to say first, if you listen to me on this channel, you know that I am openly bullish on the long-term Intel comeback story. I'm openly bullish on the American foundry story overall. But I also am patient, and I realize the fact that shifting domestic manufacturing back here on U.S. soil, it's actually a multi-decade initiative or a multi-decade effort. But it is a geopolitical necessity, in my opinion, for the U.S. But we need to be patient. And Intel's at the epicenter of that shift back here or that movement for the American foundry. So for me, I'm giving this stock some patience to work through kind of how they're transforming themselves and their turnaround story. So a little pullback this week doesn't change my sentiment or view in the stock at all. And I do think as we look on the screen, we have to acknowledge the fact that Intel's had a massive month. If you look across the board, we've had a massive May overall from where we started on the left side of the screen to where we ended at 114, just under 115 a share. The stock actually has shown massive momentum. It actually has moved up in the month. It finished just under its 52-week high in May 11th. You can see the top of the screen there on May 11th. It actually hit just about 130 a share. So it's just below the 52-week high of 132 and change. But remember, Intel's 52-week low was $19 a share. So this stock has had massive momentum and a massive kind of growth overall. And it just represents the turnaround story for the company, in my opinion. So even with the minor pullback to 115 on Friday, we see that we still have massive amounts of shares too. Look at that on the bottom right-hand corner, 191 million shares. The market cap for Intel still stands at a commanding $576 billion. So the market is aggressively pricing in their structural pivot. But we do have to be honest, they had a bit of a setback this week. They actually got downgraded by Northland Capital. And you can see on your screen there, Northland downgrades Intel based on valuation concerns overall. So they downgraded them to market perform. They actually suspended their price target overall. And it's based, if you look at the headline of the screen, on top of the screen from the article from investing.com. So Intel is actually losing a bit of the race here in the CPU. So as the headline says, Intel is supposed to be in a new CPU era, but is losing market share to AMD and ARM. And if I pull over the next, we can dive into some of the specifics on there. You can see in this Seeking Alpha article, they go through it right below that orange bar, you can see UBS said that the first quarter CPU shipments of ARM and AMD outgrew and continued to gain at the expense of Intel quarter over quarter. In fact, total CPU shipments increased by 6%. So that's a great bullish sign for the CPU segment because it's significantly over the normal seasonal kind of being down by 7%. But ARM and AMD are benefiting from that growth overall, and it's coming at the expense of Intel. If you look down at that second to last line, you can see it says Intel's share in the CPU market is at a 54.9 overall. That's a significant drop. So their CPU market share has collapsed now from over 64% down to 55%. And when you pair that with the staggering $2.3 billion in operating loss from their foundry division, that's driven by poor manufacturing yields on the 18A and 14A nodes, Wall Street is issuing a harsh reality for the stock, in my opinion. And the retail crowd is interpreting it a different way because when they look at this type of manufacturing kind of setback or the operational loss in that on that foundry side of the business, it reminds Intel of kind of the haunting ghost, or reminds retail investors of the haunting ghost of Intel. The 10-year nanometer delay, the culture that crippled the company a decade ago. They fear the old habits of overpromising and underdelivering are still deeply embedded. But you have to understand the physics of semiconductor foundries. And the physics are clear. You have to bleed cash before you can print cash. This operating loss is simply the upfront price of building a bleeding edge capacity. And under the hood, the capital is finally starting to yield results. Because we know we've seen leadership change in Intel. With their new CEO of Lip-Bu came in, and he's radically shifting the company and changing the company overall. The strategy under him, it's actually starting to work. So the 18A yields are showing a consistent 7% month-over-month trajectory improvement, and the 14A risk reduction is locked in for the 2028 timeframe. Intel still remains the only viable Western backstop for domestic leading-edge lithography. However, the stock is facing pressure, and it's based on the performance of their competitor, too. This is another reason, in my opinion, why it's facing pressure in the market. Because when you look at AMD, AMD has been on an absolute tear during the month of May. You can see down at the bottom, the stock in 1 month was up 46%. It hit an all-time high of $527 a share, and the market cap for AMD right now is $842 billion. AMD is executing flawlessly right now in the market. They're executing flawlessly on the software and the accelerator side of the business. I want to show you one more slide on Intel before we wrap up, because this to me came across, and for me, it's a bullish sign. I'm interested to see how you guys interpret it. But Yahoo Finance put this out, and I highlighted in the box below, because while retail is panicking over Intel's kind of horizontal grind to the 114 mark, big money and political lawmakers are quietly using this consolidation to accumulate shares of Intel. Look inside that box right there. It says political stock trends. Republican lawmakers are favoring Intel in their investment strategies, with the stock now making up almost 8% of GOP portfolios, marking a significant increase. So to me, if we know just how the stocks that have moved that have been supported by this administration, Dell being one of those examples. Now, they had an outstanding earnings as well, but we know also that they've been heavily supported by the administration. And most stocks that have been moving in the right direction. So for me, this is kind of a bullish sign overall. But what we're seeing in the market, the rift between AMD and Intel right now is real. And AMD is priced for absolute perfection today. Intel, on the other hand, they are grinding through the mud right now, trying to build a irreplaceable geostrategic manufacturing foundation for tomorrow. I still believe in them overall. My sentiment hasn't changed on Intel. It's a long-term view, as I mentioned. I believe in their comeback story, and I still believe in the American foundry and them being at the epicenter of it. So let's shift to the second stock that's been causing a ton of anxiety this week, and that stock is Everspin. So I'm going to pull up their graphs as well. Everspin Technologies, MRAM, as you know, it is called on the market. And I want to just ask this question, or hopefully my answer can solve the riddle, I'll say, that a lot of retail traders had this week, and a lot of questions I had, is that Everspin Technology, why didn't it catch the wave that all the other memory stocks caught last week? We have to look at the tape, because Everspin has been an absolute high-flying speculative favorite. It skyrocketed let's not forget, it has skyrocketed from a single-digit base of almost just about $9 in late March, all the way up to a 52-week high of $51.50. Retail aggressively chased the stock up to its $44 stock price closing there in kind of May 12th overall, kind of middle of that week. It was driven by immense speculative hype around the AI edge hardware qualification milestones. But the party paused aggressively this week. We definitely saw Everspin or MRAM pull back violently. There was profit taking that occurred, and they had a brutal 23% single day drop to close the month at about just over $26 a share on Friday. With the market cap compressed to roughly $618 million right now, it still remains a high beta play where technical indicators are wound tighter than a spring. But I want to look at some of the structural factors that explain the divergence overall. So I put this graph together. Let me pull it up because I think it just helps us see the key moments in May that caused this stock just pressure overall. I think right in the beginning of the month, the stock jumped after it was announced that they were awarded a $40 million defense contract. And you can see that growth from May 1st all the way up to the high of the month of May 12th, where it reached $44 a share. Below the 52-week high, we know, but that was the intra high in the month of May. After that, in fact, I just think we saw a bit of sell the news overall. You saw profit taking. You saw some insider selling there on May 15th. It was about $9 million got liquidated. And then the big catalyst was the short sale. The announcement by Kerrisdale Capital that they are shorting the stock, it caused significant pressure, not only on the 19th, but all the way through the end of the month. So, guys, this was no question about it, the biggest catalyst, kind of negative catalyst for the stock in the month of May. Kerrisdale Capital, they issued that highly publicized short report targeting the company, pounding the table on Everspin's elevated price to earnings multiple and pointing directly to the wave of insider selling that was near that $44 peak. And in a thin kind of float, small cap equity like Everspin, an institutional short attack, it triggers an immediate automated retail liquidation against the stock. The algorithms don't care how hot the broader semiconductor sector is running. They just see that headline and they dump their shares. But here's the hard truth that's hurting the stock right now. Let me pull that back up. This is the hard reality in the market right now, is that MRAM or Everspin is an edge technology, not an AI data center technology. And that reality is hurting the stock right now because we're seeing hyperscalers right now in the market. There's massive capital expenditures. It's flowing from Microsoft, Google, and Meta, and it's going into the data centers that require raw, high-density capacity. MRAM cannot compete at that physical scale today. Its architectures are meant for localized embedded computing nodes. This is, in my opinion, where I think some of the investors are missing. They're missing the forest through the trees with this stock overall. The short sellers right now, they're evaluating it through a legacy terrestrial lens. They are entirely blind to the next multi-decade frontier. And guys, this is what all about Everspin is and why I like the stock and why I hold it for a long term, because the migration of data centers to space, that's the biggest reason I'm have conviction for the stock overall, because think about that macro trend. We're seeing the Department of Defense, SpaceX, and global aerospace giants. They're actively deploying distributed orbital mesh networks and cloud compute clusters into low Earth orbit. We are sending actual AI compute nodes into space to process edge data before it ever touches the ground. And out in a harsh environment of space, the terrestrial memory playbook gets completely thrown out the window. Standard DRAM and NAND flash are absolute liabilities in orbit because they rely on microscopic electrical charges. A single cosmic ray or a high-energy solar radiation event can flip the bits, corrupt critical AI model weights, or physically destroy the chip. The constraint power drain required to keep a standard DRAM constantly refreshed is a luxury aerospace engineers cannot afford. MRAM fundamentally solves this cosmic bottleneck because it stores data magnetically. It possesses inherent military-grade radiation immunity. It requires zero power to hold the data state during sleep cycles, and features instantaneous write speeds that protect data from orbital power fluctuations. Sovereign nations and defense contractors aren't looking at MRAM as an alternative. They are treating it as a non-negotiable foundation for autonomous space infrastructure. So if you were holding Everspin or MRAM today and watching a 22% haircut from a short report, I know that feels painful. But separate the short-term noise from the long-term structural signal. Terrestrial hyperscalers, they belong to Micron and the other members of the Fab Four. But the second that compute breaks out in the atmosphere, MRAM's architectural moat becomes entirely unrivaled. For long-term investors, the story hasn't even left the launch pad yet. So let's bring it all home and talk about and just kind of circle back on everything we talked about in this video. Because if you're holding Intel or Everspin today and you're watching that 22% haircut or a major analyst upgrade, I know it feels painful when it tests your conviction. But remember what this channel is all about: separating the short-term operational noise from the long-term structural signals. Terrestrial hyperscalers belong to Micron, SK Hynix, Samsung, and SanDisk. Intel has to grind through the mud of fixing its foundry yields, but its position as the ultimate domestic manufacturing backstop remains intact. And for Everspin, like I said, the second that compute fully breaks out of our atmosphere, MRAM's architectural moat becomes entirely unrivaled. For the long-term patient investors, this is a story that's not broken. It's a story that hasn't even started yet. It hasn't left the launch pad yet, as I said. So let me know your thoughts and comments below. What are your thoughts on these two companies, and how are you playing the stocks right now in the market? Thanks for watching the video, and I hope to see you guys in the next one.